Welcome to Stock Market Explained. What if a company raised how much it paid you? Not once, not 10 times, but over 125 times. Through crashes, a pandemic, everything. That company exists. And most people have never heard of it. Meet Realty Income. It's a company that owns over 15,000 stores. Think pharmacies, dollar stores, grocery shops. They collect rent every month from those stores. Then they send that rent straight to investors. Every single month. Back in 1994, Realty Income made a bold promise. We will pay our investors every single month. Not once a year, not 4 times a year. Every month. That was almost unheard of. They called themselves the monthly dividend company. And they meant it. Here's the best analogy. Imagine your whole neighborhood pools money together to buy hundreds of stores. Every store pays rent. That rent gets split and sent to everyone, including you. That's Realty Income. One share and a monthly rent check lands in your account. Simple. But here's where things got ugly. In 2023, interest rates shot up to a 23-year high. When that happens, bonds, basically government IOUs, start paying really good returns. So investors asked, why own a landlord stock when a safe bond pays almost as much? Realty Income's price tanked. Then, plot twist. In January 2024, Realty Income spent $9.3 billion buying a competitor, getting even bigger. And when the Federal Reserve signaled rate cuts were coming, investors rushed back. The boring landlord stock quietly started hitting new highs. Boring one again. Here's something wild. Since 1994, Realty Income has raised its dividend over 125 times. That means through the dot-com crash, the 2008 meltdown, and COVID, they didn't just keep paying investors, they paid them more. Every single time. So how big is this thing? Realty Income owns roughly 15,450 properties, grocery stores, pharmacies, dollar stores, across the US and Europe. And for over 30 years straight, they've mailed a rent check to investors every single month, never missed once. Now think about this. By law, REITs must pay out 90% of their income to shareholders, and Realty Income keeps 98% of its properties rented at all times. That's not luck. That's a money machine built for reliability. Here's the thing. When interest rates shot up in 2023, boring dividend stocks got crushed. Investors ran to bonds instead. But the moment the Federal Reserve signaled rate cuts, money flooded back in. Realty Income's stock surged toward new highs. Patient investors who held on, they won. While everyone chased AI stocks and SpaceX buzz, the boring investor was collecting monthly rent checks and quietly building real wealth. You don't need to be rich to start. One single share, one monthly payment, and 30 years of that? That's how families actually win. The lesson? Consistent and boring beats flashy and exciting. Every single time. Your family doesn't need the next big thing. Sometimes it just needs a reliable rent check. Follow Stock Market Explained for more.